After COVID, we saw there was that peak, if you like, in stocks, in the warehouse stocks for gold and silver. And then the level of stocks declined and declined and declined into the beginning of the fourth quarter, 2024.
So as an investor, do you think this is a time to be extremely defensive? In other words, sitting on the sidelines, potentially, like, I mean, if we see a steeper correction in gold, I'll be a buyer for sure, add some physical. But do you think this in generally is a time to play defense? You said traditionally, brokers and CFAs and people who are trained in the traditional financial system would now be looking to the bond market as a place to allocate capital. In the short term, I think you were alluding that could potentially be a place to deploy. I'm thinking maybe 90-day treasuries, something like that. But what are your thoughts? Would you be playing defense? And is there anywhere in the market that you would be looking to deploy capital at this point in time?
Well, first of all, I'm not an investor. I'm an uninvestor.
Of course.
Get out of credit. It's credit that's going wrong. And really, it doesn't matter whether it's, shares in the Magnificent Seven or US Treasuries or whatever. It's all going wrong. Get out of credit and get into real legal money. And there's only one thing that's real legal money, and that is gold. Also silver, but silver is not priced as money. And that's something that will have to change. So you're gambling a bit, if you like, if you go into silver for that to change. I personally think it will. But and don't go into ETFs. I mean, physical gold, possess it. That is the important thing, or at least store it somewhere where you can access it. Store it safely, fully insured, and all the rest of it. There are various forms. I mean, this is the business that gold money does, and there are others who will do that. So, but get it out of the banking system, because I mean, the problem when Roosevelt produced his executive order in late 1933, the banks basically took everybody's gold that they had in their possession, if you like, looking after it as custodians, and just made it over to the Treasury. It was the Treasury, I think, in those days. So, the banks will take it off you. And give you dollars, if you like, instead, which is not really what you want. Keep it out of the banking system. Don't have any credit. Now, I know that's impractical. But basically, we're moving from a position really where, we're moving from trying to accumulate wealth to trying to protect it, preserve it. That's the key thing. And as I say, I'm not an investor. I'm a disinvestor.
Some great words of wisdom there, nonetheless. The massive outflows of both gold and silver from the LBMA have been a big story recently. There's a number of people I've talked to about this who say this is actually quite a major move, and inventories of the LBMA are getting low on a historic basis. I talked to Mario Ineco about this, Ed Steer. This is a topic that can get quite hyperbolic. Could you describe what you're seeing when it comes to outflows from London? Are these moves as meaningful as many are saying?
Yeah, they are meaningful. I mean, the people within the system are trying to dismiss it by saying, well, actually, all it is inventory is moving from one place to another, but it's not really changing. I don't buy that line at all. Basically, the first thing that happened was there were significant premiums on the futures market on COMEX. And this set in train an arbitrage, which basically cleaned the liquidity out of London, Switzerland, and even Mumbai. Gold held in bonded warehouses, not yet entered and therefore not yet taxed, went to London. I mean, it's the most extraordinary thing. So you have to ask yourself why, and the story was that there was the threat of 25% tariffs on gold, silver, everything. Now, I didn't really buy into that story. I could understand why it would trigger concerns, that there would be a possibility. Yeah, I can understand that. But there was something else there, and I think it's to do with the stands for delivery on COMEX. because I've been monitoring these for the last 4 years or so, and particularly since Trump was elected, the pace of these stands for delivery in both gold and silver accelerated very, very substantially. To give you a clue, in the last year, 2024, the stands for delivery were a little over 2,000. No, hold on. I think it's 400 odd tons, something like that. The 2,100 ton figure I've got in mind is actually for the last 4 years, up until 2024. What has happened since then is the pace of these stands for delivery has accelerated. Now, with stands for delivery, we don't know, but the experience suggests that if you actually want to take position of your stand for delivery, it's not easy to do. And it's something that probably takes a certain amount of time and all the rest of it. So what we have seen in the past, particularly after COVID, we saw there was that peak, if you like, in stocks, in the warehouse stocks for gold and silver. And then the level of stocks declined and declined and declined into the beginning of the fourth quarter, 2024. Now that would reflect, amongst other things, people who stood for delivery withdrawing their bullion from COMEX warehouses. But there was probably still some which had not been delivered and therefore still there. Okay. Now, if we look at what's happened since the beginning of this year, over 400 tons of gold has been stood for delivery. Now, imagine that you're a bank, a bullion bank, whatever. Then probably what you're doing is you're saying, we could have a problem here. We need to get cover for those liabilities. And I think that is why we saw the premiums on futures jump to really very, very high levels, creating the arbitrage to suck in the liquidity from elsewhere. But then there is something else that has been triggered in this. It was really quite surprising in a sense that gold was leaving the Bank of England in large quantities, so much so that there was a significant backlog, I think, towards the sort of mid-April, we're getting to there now, of, sort of, if you like, bullion banks or bullion owners trying to withdraw their gold. Now, let's be clear about this. This gold is not necessarily owned by commercial entities, in the sense that they have probably leased it, so they have temporary ownership of it. While they have got temporary ownership of it, then they can do what they want, basically. So, the Bank of England has no power, as I see it, to stop them withdrawing their gold. The problem is that this is leased gold. Central banks are looking at this and they're saying, hold on a minute, we're buying gold in the markets because we're worried about the prospects for paper currencies. And, why should we be leasing gold at the same time when it goes out of the Bank of England and we're not necessarily going to get it back at the end of the lease? Doesn't make much sense.